Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of 14th of March until the 18th. As always, before we get started, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategy. Any information that relates to past performance is not indicative of future results. Now for today's webinar, looking at stocks, first things first, we had Chinese stocks specifically in focus this week. The two headline names were Alibaba and Baidu. We'll just have a look at the chart briefly first. I'm just gonna put Alibaba first up and switch it on the weekly. So you can see we had a pretty strong surge with regards to the weekly time frame. We saw that we did gap down initially and opened down here. However, prices recovered quite sharply and we're finishing the week all the way up to the highs, as you can see here. And if I pull up the chart for Baidu as well, it's more or less a similar story. We can see again more or less similar narrative. We gap down and we recover strongly and close towards the very highs. I mean, the high here was $159 and we're now trading at $151, so just $8 off the highs. The past year, Chinese stocks have been plummeting due to serious government crackdown, especially on popular Chinese technology companies. However, earlier this week, the Chinese government stepped in and they stated that they support the listing of companies overseas. It also said its crackdown on tech companies should end soon. Now, this move essentially came as American depository receipts, which is basically Chinese companies that are listed overseas, or basically any US listed companies that are not based in the US. They have been beaten down recently amid the regulatory and delisting fears. Now, Chinese stocks, they had an explosive Wednesday overall. Nasdaq's Golden Dragon China Index gained close to 33%, while another index gained a whopping 56%. Now, regulators from both the US and China are progressing towards a cooperation plan on the US listed Chinese stocks, according to Chinese state media. So as we mentioned, Baidu and Alibaba were the two main players with regards to some of the bigger names posting some crazy returns. If we put it into perspective of a percentage, Baidu ended the week 37%, or gaining $42 per share on the week. And if I switch again to Alibaba, we'll see that again we had a pretty strong surge, and Alibaba's surge was 35%, or $28 per share. Again, for the size of these two companies to rise by as much, it's quite staggering. So you can see what kind of impact this news had on these two stocks and overall on Chinese stocks on the market as well. Now next up, moving on to Forex, the news in focus were of course surrounding any developments in the Russian and Ukraine conflict. Despite the fact that there has been no ceasefire yet, there was some optimism as both countries expressed their interest to sit down for peace talks, with Russia listing some of its demands, which were seen as a bit more reasonable for Ukraine to consider and negotiate on, rather than what was stated at the very beginning of the conflict. The impact was directly seen onto the safe haven currencies, so specifically talking about the Swiss franc and the Japanese yen. If we look at the Swiss franc, we can see that it rose for the second consecutive week. Obviously, it wasn't as strong as the surge of last week, but then again, it still posted a 1% gain on the week, or 107 pips. The bigger move was on the Euro-Japanese yen. If we look at the chart, we'll basically see this very strong candlestick, which basically looks like it's a continuation of last week's surge. In terms of numbers, the Euro-Japanese yen rose by staggering 2.8%, or 360 pips. So you can see overall, the safe haven currencies suffered a little bit throughout the week, as obviously we had some optimism surrounding the ongoing conflict. We also saw this translating on other currency pairs, another one being with the Great British Pound. The pound was also boosted further by the fact that this week we had the Bank of England interest rate decision, where we had the interest rates being hiked by 25 basis points. This meant that we saw the pound rising strongly, with the GBP CHF being up by 0.9% or 111 pips. But just how it was with the euro pairs as well. The pound Japanese yen was the one that posted the bigger gains. As we can see, the candlestick here pretty much sums it all up. The pound yen rose by 2.6% or 400 pips on the week. So we can see some pretty strong moves happened in these stocks and Forex market, obviously for different reasons. We can see there were tons of opportunities to be taken advantage of, considering the news headlines that they were out. Now, continuing with the news of Russia and Ukraine, we're going to be looking at the oil prices as well. Due to the fact, again, that we had some optimism with regards to the ongoing conflict and the willingness for peace talks between the two countries. This meant that oil closed off its second consecutive week in the red, as we can see by the candlestick here. Of course, it did recover most of the losses that it made throughout the week, because if I remember well, at one point during the week, it was down by 14.5% or around $16 essentially. But it has recovered now, as we can see by the candlestick, now being down more or less 3.3% overall. Another thing that also caused prices to be pressured as well was also the oil inventory report, which is important not to forget, despite the fact that we have other news headlines that are overpowering the oil inventory report. That can also further pressure prices. The overall estimate with the inventory report was a decrease in supply by 1.3 million barrels, whereas the actual figure was way off the estimate and showed a buildup of 4.3 million barrels. So yeah, we can see prices did recover most of the losses. That will be interesting to see next week how we're going to fare up, again, depending on the oil inventory report and also any further developments on the Russian-Ukraine front. Lastly, we'll be looking at gold prices. Again, same narrative more or less as with oil prices as well. With gold, it fell sharply, which again is likely due to the news between Russia and Ukraine, which also seemed to be the main driver for prices, of course, for many different markets, as we also saw. Prices fell by 3.33%, which is this candlestick right here, or $66. And as we can see, we closed back down the $2,000 mark last week. We managed to break strongly above it. Again, we came and retraced back lower, closing below it, and now we're pushing even further back down and away from the $2,000 mark. If I just place some indicators as well, specifically the RSI with the default parameters and the exponential moving average as well. I'll just change this quickly to a 21 and exponential. We can see here the RSI, which is interesting, as soon as it tapped the 70 mark, which is pretty much entering overbought area, that's when it started making the retracement back down towards like the 50 level more or less. And we can see as the further and further away we push from the 21 EMA, obviously since it's the moving average with the average price that is considered to be the mean where the price is going to be trading more or less, we can see that we're also trying slowly to come back down and retest the EMA. So definitely going to be interesting to see when we actually reach the 21 EMA, what sort of reaction we're going to get, because it's more or less going to coincide with the RSI coming down to the 50 mark. And as we can see here, it's on the 61. So we might have some factors playing onto seeing the gold prices rising and bouncing off of the 21 EMA. So yeah, definitely a couple of interesting weeks ahead with regards to not just commodities but Forex and stocks as well. Yeah, we'll be able to see how prices are gonna fare up with regards to the news, that we have specifically for these assets, as well as any further news with Russia and Ukraine. And there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.